Hello, Dr. Podcast Network. I'm Evelyn Coira with Lightspeed Investing. And today we have the President CEO, Philip Jayhawk Chan. And we are going to be asking some questions and insights so he can elaborate the history of the company, Lightspeed Investing. Philip, could you go into a little bit more details and elaborate what is Lightspeed Investing?
Yeah, so great question. So Lightspeed Investing is a private investment firm based in Florida. And, this company started 15 years ago, specifically in money management. So some background, right? There's a gentleman by the name of John Arnold, who after graduating from Vanderbilt was able to take 1.5 million to 1.5 billion in 2.5 years, coining him one of the youngest billionaires in the US at age 33 back in '07. Now, the reason why he was able to accomplish this feat was because he had the ability to trade the commodity natural gas very successfully. So the origins of this company started because Arnold, right, before he actually became a billionaire, hosted a lot of trading workshops and seminars in Dallas, Texas. Now, my business partner, the former internal medicine physician, who is, about 10 years older than me, as I mentioned in our last podcast interview, his mom traded the markets, and so she knew about John Arnold at the time, and she figured it would be a good activity for her son to be close to Arnold to learn from his skill sets. And lo and behold, it was a great opportunity because even though my business partner's mom still wanted him to finish med school and everything, he was able to really cultivate this skill set to a very high level. And that's where, as he went through college, medical school, and residency, well, specifically college and medical school, he was still trading very, very high level. And after working after working as an internal medicine physician for a year, he was like, okay, I'm good to go. And let's build this business, and put more focus on it. So the main business, doctors, it started 15 years ago as money management for high net worth individuals, specifically the core demographic of our fellow physicians. There was a gentleman by the name of Dr. V, who's a radiologist, that also knew about Arnold, and I believe they met at Arnold's workshop together. But the issue was, Dr. V is like, hey, well, this information seems great. I truly love it, but I don't know how I'm going to actually take advantage of it and implement it because I'm too busy running my practice. Now, you, young man, you seem like someone that's sharp and capable, so I'd be willing to give you an opportunity in the form of $500,000 and see what you do with it. So essentially, my business partner was able to generate very satisfactory returns on that 500,000. And as you know, when you graduate from medical school, you have a lot of fellow medical students, fellow medical peers. And similar to the social circles of the wealthy, right? If you're able to generate returns for a medical professional, well, they're going to tell fellow medical physicians. And that's basically how we got our start 15 years ago. Now, as we were able to generate these returns consistently, a lot of them started asking us, hey, let's be honest. What if something happened to you? What if something were to happen where you're no longer around us, right? We're just enjoying these returns, but we're also very dependent on you. So, upon client request, that's when we actually developed a proprietary trading education platform all the way back 12 years ago so that we can teach others how to properly navigate and invest in the future's financial markets the right way, allowing them to be less dependent on us, right? And also, on another note, minimizing the barrier to entry because when we manage money, the minimum is 500,000 and up, and not everyone has that type of capital. So in order to be able to benefit from the futures financial markets, right? The transfer of knowledge and skill set, was another avenue that we got creative with and have been doing it, for the past 12 years.
And could you go over a little bit more on what is the future financials market?
Yeah, I love that. So at a very rudimentary level, let's just break this down, right? So on the left side, you have traditional investments such as stocks, real estate, and even a college and medical education, right? Graduate degrees. And on the right side is alternative investments, specifically under derivatives, is where we find the futures, financial markets, as well as cryptocurrency, stock options, art, luxury timepieces, etc. Right? So we are in the non-traditional side of things, specifically under derivatives. Now, in terms of the asset class itself, the futures financial markets is, it's not stocks at all, right? So let me just get that clear. The futures financial markets is a evolved form of commodities, right? So within futures is really futures and commodity financial markets, because you can not only can you trade the Dow Jones as a whole as an index, we call it the Dow US 30, but you can also trade oil and gold, soybeans, corn, cotton, right? Those are your commodities. However, it's a bit different than the old days, where it's not like you put in an order and you get physical barrels of oil to your address, right? It's all electronic now. So the beauty of this game, right, is the margins that you also get. So when we talk about light speed investing, you know, there's two components, right? One is the barrier to entry, and then the other is the upside that you get naturally when you participate in this game.
Hey, thank you for sharing those details, Philip. Can you go a little bit more into what leverage this space has, this type of asset class?
Yeah, absolutely. So in terms of leverage, what I was saying is it's really twofold, right? You have the lower barrier to entry as well as the actual returns that you can get. So, while we're on this topic, I'm just going to compare it to other asset classes, right? And then I'm going to bring it back to this asset class and compare it to different brokerages, right, within this asset class that still make a huge difference. So first and foremost, comparing, contrasting the futures versus other asset classes. Okay, let's talk about real estate and colleges, because that's the two most wide known. All right, and then I can talk a little bit about stocks, and I'll come back here. So essentially, with real estate, to get in the game, you're usually looking at a 20% down payment. And that amount is either $40,000, $50,000, maybe 25,000, and maybe it can go up to $100,000 depending on location and the size of the property that you're talking about. Now, what is the returns that you're going to generate, right? You're looking at maybe 8 to 12% a year. If you're lucky, 15%. But really, you're not going to break even and have those huge upside until 2, 3 years out, right? That's very natural within real estate. If you look at colleges, right, as a lot of us have opted into, right, before you continue to some form of graduate degree, whether it be your master's or medical doctorate, you're looking at a minimum of 4 to 6 years in college, because the average is 5. Depending on what schools you go to, 5 to 6 figures of student loans, right? So that's the upfront investment. But what's the runway, right? So 5 to 6 years in college, 5 to 6 figures in student loans debt, just to come out. Let's say you didn't even want to be a doctor, just to come out, to have a entry level position where the average salary is $40,000 or $50,000, right? So what kind of ROI is that? I mean, you're putting the input is 5 or 6 figures. the time frame and the runway is 5 years on average, but you come out with a very low five figures, right, for annual salary perspective. In terms of stocks, right? So that game is based on fundamental analysis. Fundamental analysis is where you're concerned about the economic trends of the world, the interrelatability of markets, right? And even when you invest in stocks, you're a shareholder of that company because you've done due diligence and research on that company, but you don't have direct control of the actual trajectory because you're not the founder, you're not the CEO, you're not actually on the inside leading that company. So you're just right. It's speculative. You are investing in that company because you think it should do well, right? That's fundamental analysis, right? So on the left side, traditional side. So when you compare that to futures, as we're talking about leverage, the beauty of futures is, the barrier to entry is very, very low, right? So we talked about barrier to entry, the runway for time, and then the actual ROI. Within the futures financial markets, to be successful, the game that we naturally play is within the realm of technical analysis. So very similar to a radiologist reading x-rays, looking for anomalies, right? Or pathologists with their slices of tissues. It's all based on pattern recognition, but more importantly, pattern recognition, right, based on the charts that are in front of you. So the beauty of the futures financial markets is, number one, it's based on 5 to 7 factors, right, to be successful, right? According to our proprietary science, there's 5 to 7 factors, and only when they are in confluence do you want to enter in a trade. And so when you bring that back to fundamental analysis, where maybe your research and due diligence is all speculative, this is based on a skill set that you can control. Okay, I just want to make sure I address that. Now, in terms of leverage, right, because it's based on a skill set that you can control, you can really maximize the leverage that this asset class has to offer. So even within the futures financial markets, there's different brokerages out there that you can utilize as a resource to get in this game. And if you didn't know better, you could potentially choose a brokerage that has a very high barrier to entry. For example, if you just Googled a very popular one, there's a brokerage called Interactive Brokerage. And on that platform specifically, right, just to trade one contract of the Dow Jones, the Dow US 30 index, which is the main markets that we trade, it's between $10,000 to $15,000. Let's just call it 12,000, right, for one contract for the Dow US 30. To trade one contract of gold and oil respectively on Interactive Brokerage, you're looking at $17,000 and $27,000, right? For us, because we've been around this industry to know what brokerages are the best ones, the ones that we recommend is totally different because the barrier to entry, for the same markets, the Dow US 30, gold and oil respectively, is not 12,000, 17, and 27. It's $500, 1,000, and $2,000. So we're talking about 3 to 4 digits on the low end versus 5 digits, right? And that's the barrier to entry, right? Just to get in the game, to trade one contract, which is a totally, huge difference. And, $500, is something that is very affordable to the general public, right? Or even 1,000 and 2,000. Now, on top of that, right, the returns that we get, right, we're not talking about 8 to 12% annually. We're talking about being able to do that within a day, right? But I want to address, the reason why we're able to do that is because of the skill set, okay? It's about being diligent to where you have the skill set to be surgically precise, where you leverage these futures and commodity financial markets like it is your own personalized ATM machine, right? So again, there's 5 to 7 factors, and only when they are in confluence do you want to enter in a trade. The risk to reward ratio that we're looking at, right? It's on a minimum, it's 1 to 3. What that means is, we're risking $5 to make $15. $50 to make 150, or $500 to make $1,500 at the minimum, right? What you have to recognize, and let's just focus on the Dow US 30. Again, that's the main markets that we trade. This game is based off of points, okay? And remember, because it's based on pattern recognition, we're not just banking for the markets to go up in order to profit. So, what makes this game so uniquely different is that when you have the skill set down, you can actually make money when the markets go up, down, or sideways. And as a matter of fact, when the markets go down here, it goes down 67% faster than when it comes up. So what that means is, if you looked at the stock market crash of 2008, right? Let's just say you had $1 million tied to the stock markets. And because of the market collapse, the valuation of your shares at $1 million will also collapse, right? And who knows how long it's going to take for those shares to come back up, right? Because that's why people freak out. The difference here in futures and commodity is you can make money when the markets go down, right? And again, when it goes down, it actually goes down 67% faster. So as opposed to people engaged with fundamental analysis on the stock side and traditional side, where they're just like praying for the markets to go up because that's the only way that they can make money, it's totally different here, right? And so again, we're not day traders where you spend 5 to 8 hours in front of the screens. We follow a proprietary science and skill set that allow us to go in and out of the markets between half an hour to an hour and a half, right? Where we can be very surgically precise in our trades and where we focus on the inputs, right? Because the inputs dictate the outcome. Money is just a byproduct of your skill set. Money is a byproduct of the quality of your inputs, right? And so at the end of the day, not only is it based on a skill set, but on top of that, as a business, is tremendous, right? In terms of the upside. When you run a brick and mortar business in general, like if you were a restaurant owner, if you were a construction business owner, 20% margins is considered a pretty good number. Okay. What that means is on $1 million, if you can profit 200K, that's pretty good, right? Because you obviously have overhead, you have employees and expenses. And that's great, but again, that's a lot of work, and you're taking a lot out of your profits. In this game specifically, what separates it compared to traditional businesses is that this game is 90% margins, because the only overhead is your internet, the laptop you're trading with or computer, as well as your electricity bill, right? And of course the nominal fees that you have to pay your brokerage, but it's very small, right, compared to your big equipment trucks, etc. And so, because this game is based on a skill set that you can control and cultivate, right, you can actually grow and scale this thing to become a legitimate business, and you can use it to supplement the main thing that you're passionate about. So let's just say, if you were a physician with a private practice, right, that you founded, and you don't want to quit medicine, but you're looking to have a resource to add additional income stream, you can use this to supplement the operations of that main business. Now, we've actually retired medical professionals from their careers if they want to, because as I mentioned, if you are someone like a radiologist or pathologist, where you have a natural knack for recognizing patterns, or maybe you're infectious disease and immunology, right, specialist, it's the same thing, where you are very strong in recognizing these patterns and executing on them, then you could consider, once you get good enough, actually replacing your medical career with this trading business. Ultimately, no one is held captive, right? It's based on your own skill set and your own decision Again, I would look at this game like it's a skills based opportunity where you're able to go in and out of the markets and you leverage it as your own personal ATM. So, if you want to go check out your ATM for profits, just to supplement your business, you're free to do that. If you want to utilize it and have it be your main thing, you can do that as well. Of course, again, the beauty of it is skills based and you have full control over it, right? So that is the overarching outlook and perspective, right, from a high level overview of what the future of financial markets is versus other asset classes and why it is so wildly profitable if you do it the right way, right? Most people are very scared, apprehensive about the volatility, fluctuations, and movement in the markets, as they should be, because they're not educated. They don't have the knowledge and the skill set, right? But because we've actually figured this game out, remember, 70% of our methodology comes from John Arnold, the gentleman that took 1.5 million to 1.5 billion trading the commodity natural gas very successfully. And the other 30% comes from us being former medical professionals with additional prudence, professionalism, and ethics added on top of Arnold methodology. We don't look at the markets the same. We look at the markets, right, as if we were California surfers just waiting for that next wave, right? Because we're very disciplined and we know certain things to watch for, right, before we even enter in on a trade, making sure that we're entering on momentum so that the markets are with us, not against us. So that institutional activity is on our side, not on the opposite side. And I mean, yeah, that those are the philosophies that's allowed us to have an 8-figure business, and even looking at the main business, right, being able to generate satisfactory returns on a consistent basis because we follow with discipline a set of rules before we even execute.
For someone who is looking to grow and scale their business, what is the expected returns, daily, monthly, or even yearly? What
Well,
can
again,
someone expect?
this game is based on a skill. So most returns you hear out there are 8 to 12% on an annual basis. I would say you can really expect with your skill set, 5% a day, right, at the minimum. And if you can do well, you can bump it up to 8% and 10% a day. And the beauty of it is the better you get with this skill, then the more you can really enhance that number. And what I also want to be, what I want to share with the audience here is there's a specific way in getting better, right? That we have also made sure to we create as a public service announcement, which is, since I come from surgery, I'm just going to use this example. There's a huge difference in me teaching surgery, right, and someone actually doing it. So there's a tremendous focus on 3 phases, right? When we talk about this game, you have to first and foremost be willing to learn and be a sponge, just to absorb the information because it's obviously going to be new. It's a new arena, right? You're just getting exposed to it. But as you become more and more immersed and familiarized, what you then want to do is instead of jumping to operating on a live patient, because I think we can all agree that learning how to do surgery is totally different than operating on a live patient, right? So you want to operate on a mannequin patient, making sure that you have more winners than losers on a consistent basis before you actually transition to a live patient. And so in that regards, right, the way that we have our program set up is we make sure our clients learn first and that they practice on a simulated account, right, where they're trading paper money before they ever transition to trading live money. So that's kind of how we go about it. In terms of client success and testimonials, We operate on a very private, exclusive, and discreet manner since the main business is money management, right? For high net worth individuals. So basically, everything that my business partner does is very regulated, and he prefers to be more under the radar because you have to be careful with legalese and putting yourself out there. And that's another reason why we decided to partner up, because I do not personally manage money, right? That's not my expertise. I was brought in for all things business and leadership development. And so in that regards, I'm meant to be the face of the company to help create public awareness. And because you have to recognize that unless you're someone who is heavily immersed in the financial districts of the world, such as the New York Stock Exchange or the Chicago Mercantile Exchange up in Chicago, you would not be privy to this information. And so for us, yes, we've been able to manage money for the past 15 years successfully, but we really want to be able to open up this knowledge and create exposure to the public in a very strategic way, because the public ought to know about this. I mean, what we are discussing right now is the inner workings of wealth creation within hedge funds. And if you look at the typical hedge fund managers, yes, they do it, but not a lot of them are willing to divulge this information and unveil the inner workings, right, of how they actually hedge, how they invest, what is their philosophy, what factors they look for that makes their investment firm successful. So obviously, as us coming from the medical field and us having that medical training, we know the power of this, and that's kind of why we're currently so passionate about bringing this to light again, right, in the right way, as opposed to obviously just blasting it with a megaphone out to the public.
If you manage money for high net worth individuals, why are you looking to promote?
That's a great question. We get that all the time. Again, right? You never know what is it that you don't know that you don't know. So we're looking to promote this to let others know that this really exists. Now, and not only does it exist, but there is a way to go about it to extract profits from the markets the right way, right? You hear people losing money in the markets all the time. And again, the reason why they do it is because there's no robust training that gives them the right knowledge, the acumen, and the tools to succeed. So yeah, I mean, we're looking to promote and bring it to public awareness, because also we're in the digital age, right? So we are now equipped with technology that allows it to become easier and easier to let the world know about it. And it's at the beginning of entrepreneurship and business, you know, your focus is, hey, like, how do I make money to keep my company and my family afloat, right? But once you get past a certain amount, and you become more and more mature, it's about paying it forward and how can you contribute, right? So in a way, we recognize that this is a good thing to do, and this is our way of contributing.
Awesome. Thank you so much for elaborating and sharing your insights. That concludes all the questions that I have today. Philip, thank you so much. Is there anything else that you want to share or elaborate with anyone?
I would say, to my fellow Doctor Podcast Network, it's been a joy of being able to provide you this content. Do not hesitate to reach out for any additional information. I will make sure there's additional resources, in this marketing package, so that you guys have as much insight and wisdom you need in order to make the decision to move forward. But I'm super grateful for the opportunity and super excited to continue this conversation.
Perfect. Well, thank you so much again, Philip. My name is Evelyn Coira with Lightspeed Investing, and it's been a pleasure.
Thank you. Hope you guys have a good day.
Thank you.